On August 29th, Bitcoin exploded more than 7% higher after the U.S. Appeals Court denied the SEC's recent rejection of Grayscale Spot Bitcoin ETF. But despite that bullish knee jerk reaction from the news, Bitcoin promptly fell apart and failed its breakout attempt just 2 days later. Now, that failed breakout has created a lot of overhead supply that technically increases the odds of Bitcoin moving lower before substantially moving higher again. In this video, we take an updated look at what may be next for Bitcoin, Ethereum, and the rest of the crypto market. Additionally, today we explain how a simple trading rule of not trading the news and instead focusing on price action and volume is crucial in news-driven markets. Before we dive in, don't forget to hit the like button and subscribe. And as always, nothing we say in this video is financial advice. It's simply our interpretation of what the charts say. So let's see what the charts say. After Bitcoin broke out on August 29th, we noticed that it did so on sharply higher volume and the price moved back above the 10 and 20-day moving averages. It was a powerful move confirmed by bullish price action and volume. And although we had a lot of overhead supply from previous levels, we also anticipated that there could be a short-term shift to bullish momentum in Bitcoin. So as a result, we waited for a slight pullback and we looked for an entry point. And that entry came the next day when we bought the pullback to the 20-day moving average in the Morpheus crypto portfolio. When we entered that trade, we set a protective stop down here just below the 10-day moving average around the 26,200 level. And that also put us back below the 61.8% Fibonacci retracement, meaning that we don't want to be in this trade if it moved back below that level. And you can see that one day after we entered, obviously we stopped out of the trade. And of course, it's no fun when you have a stop out, but that's part of the business and that's what stops are for. They prevent a small loss from turning into something much more serious. The key point we want to make about this trade is that we entered it not because of the news that made the market rally, but because of the price action and volume. In other words, we treated this trade just like any other trade we would make, regardless of whether there's news behind the move or not. And that's a really crucial point that, especially if you're a new trader, you may not be aware of, and that is the importance of not trading the news and instead focusing on the magical duo of price action and volume. So we're going to dive into where Bitcoin may be headed next and some key support and resistance levels to watch in the coming days. But before we do so, I want to dive on a very important rule, and that is the importance of not trading the news. When I was a new stock trader in the 1990s, more than 25 years ago, I actually thought that trading the news was a valid strategy. If good news came out in the market, I would buy, and if bad news came out, I would sell. But I very quickly realized that that strategy was not effective. In fact, often when I would buy good news, the market would go down. And when I would sell what I thought was bad news, the market would go up. Why is that? Well, it's often because the news is already built into the price. The smart money already knows what's happening, the news is coming, and often there's an opposite reaction of what you might expect. And when I was a new trader, that's something that it took me a while to realize. So if any of you out there are new traders and you're trying to trade the news, this is a really crucial point in your trading strategy. That is, do not trade the news. Instead, base your decisions on all of your trades on price action and volume. We did not enter this Bitcoin trade because of the news. We entered the trade because of the strong price action, moving back above the 10 and 20-day moving averages on strong volume, and we waited for a pullback. Why does this matter? Because when you're trading the news, oftentimes you get emotionally involved with a trade. And instead of stopping out where we did, which was the correct thing to do, if you're trading based on news, you can say, well, maybe the news, didn't quite have the reaction yet. Maybe it's going to rally because of the news. And you start to get all kinds of generalizations and rationalizations in your head versus just saying, okay, the trade didn't work out. It hit our stop and we're out. So I really want to caution you moving forward, especially if you're a new trader, to avoid trading the news and make sure that all of your trades are based upon what you see, not what you think. In fact, that's one of the mantras of the Morpheus trading strategy: trade what you see, not what you think. And that really means ignoring the news. And, if there's a positive reaction to news, then everything you need to know about the movement will be built into the price action and the volume. Now, let's take an updated look at where Bitcoin may be headed in the coming days and specifically focusing on some key support and resistance levels to watch. Now, when you have a failed breakout, what often happens is the price continues much lower because the people who bought the breakout, they get trapped. They're trapped bulls, and that creates additional overhead supply, which often after you get a failed breakout and several days later of consolidating at the lows, you get a move down to new lows because of the additional overhead supply. And that's kind of what Bitcoin is setting up to do at the moment. You can see here that we did actually have some support that we found here right around the 25,300 level, which was the low of August 27th. And on September 1st, we actually got a sell off that tested that level about 30 points above it and reversed higher. So it's key there that we formed a double bottom. However, notice that there's now a lot of overhead resistance levels. We've got the 10-day moving average and the 20-day moving average, and the 20 is about to cross over the 10-day moving average soon, which is a bearish signal as well. And with Bitcoin consolidating near the lows here, we've got kind of a bear flag shaping up on the daily chart after that big sell-off. So this tells us that, technically based on what we see in the charts here, that there's a better odds of Bitcoin testing the lows and potentially even dipping down below these lows before rallying back up again. Now, the good news is if we do get a sell-off and potentially a break of these levels, we've got some major support on the longer term weekly chart, which we recently looked at. So let's take a look at that weekly chart again. Bitcoin has been in a long-term uptrend since the lows of 2020. And you can see here that we created several anchor points late in 2022. And right now, that long-term uptrend line that's been in place for 3 years is converging with the 50-week moving average right around the 24,000 level. So if we do get a breakdown below this 4-week low, which is looking more and more likely, the good news is that we have some major support right around the 24,000 level. In fact, what we'd like to see ideally is a breakdown below this 4-week low that undercuts this trend line and 50-week moving average. And if we get that type of move, that's often what attracts the buyers, is when we see kind of a washout there below an obvious support level, what we call an undercut. And if we get a undercut that reverses back up and forms a weekly reversal candle, that would be a bullish sign. Now, if we zoom back into the daily chart, the undercut scenario is just one possible scenario. Anything's possible in the market. So even though technically it's looking like we're going to retest these lows and potentially form new lows, we do need to be prepared for a potential rally as well, because anything's possible in crypto. So if we do get a rally attempt, obviously the 10 and 20-day moving averages are going to provide significant resistance now between around the 26,300 area. That's going to be the first point where we could see some selling pressure. But if we happen to get back above that, we've got resistance now all the way up to the high of that August 29th breakout, which is now converging with the descending 50-day moving average. And above that, you've got a trend line, intermediate term downtrend line that formed with the July high. So it's not looking real good here in the short term for Bitcoin. Although, again, as we mentioned, a washout below the recent lows could provide the impetus for the buyers to step back in. But until then, don't really see much action that's required here in the crypto market. In fact, we don't really see any low risk setups, because even though we're trend traders, if we were in a steady downtrend for a long time, then we look to sell short. But with the major support around the 24,000 level, there's not even a really good risk reward for selling short on a breakdown either. At the same time, we don't have any reason to be buying or going long right now either. So best plan of action right now is probably sitting on your hands and just sitting on the sidelines, waiting for the market to provide more favorable setups in Bitcoin. And unfortunately, if we look at Ethereum and the altcoin market, the situation doesn't look any better at the moment. This is the daily chart of Ethereum, and you can see it doesn't look any better than Bitcoin. Just like Bitcoin, Ethereum failed a breakout attempt after failing to get above its 20-day moving average, and now it's consolidating kind of near the lows. However, unlike Bitcoin, Ethereum was actually forming an ascending triangle pattern before the breakdown. You may recall we had showed you how we had some higher lows that were shaping up here. And we had a potential breakout above that, which, it failed. And now the price action is consolidating below the lows of that trend. And now that prior uptrend line that acted as support is now going to act as resistance. And notice how that's converging with the 10-day moving average and the descending 20-day moving average. So right around the 1660 to 1670 level is a major area of resistance that we could see some major selling pressure if we get a rally attempt. And of course, all the way up to the prior high from August 29th at 1745. So lots of overhead resistance. Now we are holding up a bit better than Bitcoin. We're still well above the lows, whereas Bitcoin is closer to the lows. However, unless we see any type of bullish momentum step in soon, odds do favor a test of the lows and potential lower prices before we see any type of substantial move higher in the near term. We've been scanning hundreds of altcoin charts to look for emerging relative strength, and there's really not much out there. Most of the market is following Ethereum. However, there was one exception, and that's FET. FET is an altcoin in the AI sector, and it's recently broken out above a downtrend line that's been in place since the beginning of this year, and currently trying to confirm that breakout. You can see here we moved above as Ethereum has been trending near the lows and trending lower. FET has been trending higher. Notice how the volume is picking up. So we've got volume confirmation. And, if FET can hold here, maybe consolidate a bit longer, then we could see leadership in FET if Ethereum catches a bid. If Ethereum starts to rally, FET could show leadership and continued relative strength. But with the overall market looking like it does, we wouldn't be looking to enter anything on the long side right now for more than a day or two. So any type of trade setups that you take right now should be entered with a very short-term time horizon, unless we start to see bullish momentum return to Bitcoin and Ethereum. Other than FET, there's not much on our radar that really is of interest right now. But as always, we will continue to scan the market every day, looking for new and emerging relative strength. And as always, we will notify Morpheus crypto members when we feel it's time to re-enter positions based upon price action and volume, not the news. Remember that key trading rule: trade what you see and not what you think. That's going to keep you out of trouble. We hope you got some interesting insights from this video. And if you're not yet a Morpheus crypto member, head on over to morpheustrading.com, and you can drop your email address and receive free crypto trade ideas and analysis every day. See you back here in the next Morpheus crypto video.